Hi, my name is Gary Noyd and I am the founder of NinjaSpread. In this video, I would like to give you an introduction to NinjaSpread and show you how it could boost your trading and save time. I have developed NinjaSpread 2 years ago to boost my trading and save huge amount of time by helping me find the best spread combinations in the market. Actually, I'm using NinjaSpread in two ways. First of all, I specified alerts that monitor the market all the time. Second, I manually scan for a specific spread combinations that I like for a particular stock or a universe of stocks. Now let's see why I have developed NinjaSpread and what the common problems traders face when deciding to trade options. First of all, there are too many options. If you have ever tried to manually build a butterfly or, for example, some other complex spreads, you know how time consuming and burdensome it can be on a platform like Thinkorswim or the others. It's not that Thinkorswim is bad, it's just really difficult and time consuming to build the right spread manually by selecting strike combinations and expiration cycles. Also, on these platforms there are no possibilities to be alerted whenever a specific spread is available on the market. Let's say, for example, that I'm looking for an SPX calendar with 3 days in between the expirations and the short leg be around 20 delta, and the whole thing should cost less than 150 bucks. There is no way to be notified or to be alerted about a spread like that on any other platforms. Actually, this functionality was the main reason I built NinjaSpread for. On the regular platforms, there is no way to search for horizontal skews like in calendar or diagonal spreads. I wanted to have a tool that helped me analyze the term structure to find some edge in horizontal skew. Also, it's pretty time consuming to compare different spreads, like what is better in a situation, a diagonal spread or a broken wing butterfly or whichever. So let's recap how NinjaSpread can benefit your trading. It's easy to find the best opportunities quickly without having to manually pick and choose every single strike and expiration on regular trading platforms. NinjaSpread helps you find spreads in one stock or a universe of stocks, or you can also create your own list of stocks that NinjaSpread should scan for. You can define your own search criteria, and NinjaSpread will notify you when it finds it in the market. NinjaSpread will help you analyze the term structure and show you horizontal skew, for example, for earning strategies or earning trades. Right now you will find the most liquid stocks and ETFs in NinjaSpread, but at the moment it does not contain any futures data. Now let's see who NinjaSpread is for. It's definitely for advanced options traders and not beginners. NinjaSpread is the best used when the trader knows what to look for and why. The trader should be familiar with various spreads like calendar, diagonal, butterflies, verticals, iron condors, and so on. With NinjaSpread, you can find directional and non-directional trading ideas as well. Now let's jump to the web interface and I will show you around. Now let's go to ninjaspread.com and log in by using the upper menu login button. After you have logged in, you will see this interface. On the upper menu, you will see different spread scanners like calendar, diagonal, butterfly, backspread, ratio, vertical, and iron condor. The target scanner is a specific scanner I will show you later on. In the tickers, you will see all the tickers that NinjaSpread is running on. And in the My Scan, you will have some kind of customization for your own scanner templates. Based on the upper menu you have selected, there is another sub-menu which gives you different functionalities. Right now, let's start the whole introduction with the calendar scanner. In this form, you can set all the criteria that you want to run the calendar scanner for. In the ticker drop-down, you will see all the tickers that you can run the scanner for. And in the first two are lists. You can define those ticker lists in My Scan. I will show you later on. But I have created a list which contains all the tickers. And I have created a list which contains the SPX, the regular SPX, and the SPX AM expiration as well. Now for making it easier to understand, let's run the scanner, for example, for SPY. Right now, what I'm looking for is a call calendar spread. Here you can select if it's a call or a put. The price should be from 0 to 500. you can define prices lower than 0, which means that you are looking for a credit spread, which is not possible in a calendar spread, obviously. DTE stands for days to expiration, and right now it's configured to run from 7 to 45 days to expiration, and the front data option is from 15 to 30 by default. This defines how far the front lag, the short lag data has to be in this calendar spread. This other data option is the cumulative data of the position. Right now, let's leave it like the default value. The expiration diff tells you how many days should be between the expirations of the short and the long leg. Right now, let's choose 3. You can select multiple expiration differences. The skew refers to horizontal skew in case of calendar spread. So, for example, if I say that I am only looking for backward dated skew, I should change it to 0, but for illustrative purposes, let's stick with the default value and then we can later on change it. This field stands for reward to risk. Right now, let's stick with the default. The range shows you how far the break-even points of a calendar spread is. Let's stick with the default right now. I can click on this as skipping the earnings expiration cycles, which is not relevant for SPY. Historical RV stands for historical relative value. Later on, I will show you examples with that. And the minimum value defines what the minimum value of each lag has to be. It's relevant if you run for a list and you want to omit very illiquid strikes. Let's go back to SPY. And there is another option where you can search for specific stocks that have earnings within these days of ranges. So right now, let's run the search with these settings. And first of all, you see a table and you see these columns. You can show or hide columns based on your preferences. If you click on these names, you can turn off and turn on that column. And what you see is a table with all the results. Right now, the table is sorted or grouped by expiration. If you look at the expirations, right now what you see being grouped by is September 16, September 19. Here you see September 23, 26. Here you see 30 and October 3. And these are only results with 3-day expiration differences between the lags. As you can see, if you scroll down, you only see 3 as in the diff column. So let's go through all the columns that you see. The watch columns contains different specific functionality. If you click on this button, it will save you this specific calendar spread into your own watch list. If you click on this button, it will show you the risk graph. If you click on this button, it will copy the trade to clipboard, and then you can paste the trade to Thinkorswim. The ticker column shows you the ticker symbol, which is obviously SPY because we are looking for SPY in this specific scan. The expiration shows you the specific expiration. Right now you will see these expirations. And as you can see, these expirations are also shown here as the grouping title. The differences are the expiration cycle differences. DTE is 710, which shows you that this date is 7 days from now, and this date is 10 days from now. You will see all the combinations in here. The strike is the selected strike based on the front data. The opt is call option because we have chosen call in here. The target difference in percentage column shows you how far the target price of this calendar is from the market. The underlying price of SPY is 398, and the target price of this calendar spread is 405, which means that the target price, 405, is 1.6% away from the market. The target delta is the front delta in case of calendar spread. So the short lag, how far is the short lag in this example? The short lag has 29.53 delta right now. The price of the calendar is 25. The maximum profit you can make with this calendar at expiration, as shown in this expiration graph, is 262. The risk is 25, obviously, because it's the same as the price. And the risk reward is 1048%. The skew, as defined in here, but we are not specifying backwardated skews here. The skew is minus 2.01, which means that the short leg has higher implied volatility than the long leg. This is the term structure, or you can call it horizontal skew as well. The volume, these are the volume numbers for each legs. So 405 in this expiration had this volume, and 405 strike in this expiration had this volume. Right now, when I'm recording this video, it's in the morning in Europe, so the market has not opened yet. So these are prices from yesterday close. Break-even 1 and break-even 2 stands for the break-even ranges. So you can see the break-evens here and here. And these are the exact number of break-evens. And the range between the break-evens are shown here. The delta, the cumulative delta of the position is 1. The cumulative gamma, theta, and vega of the position is shown here. You can sort the table by any column. You can sort by risk reward. You can sort by skew. For example, let's see where the biggest skew is. This one is the biggest skew. If I'm interested in this spread or this spread, I can add it to my watch list by clicking here. And later on, I can refine this trade. For example, let's see only backwardated skews where the skew is negative. And here are the results, almost the same as before, I guess, because there was no contango skew in this type of search criteria. But you can also define here, for example, if you don't want to see illiquid strikes like this one, you can set the minimum volume, for example, to 10, and then this one will be left out. Let's see, there will be no 66 by 6. Yes, there will be none, because we defined that the minimum volume has to be 10 on each legs. Previously, I said that we should stick with the default range, which is 0 to 100%. Right now you see that the range ranges from 5.5 to 6. You can define your scan like you really want to see only 6% ranges in calendar spread, and then you will see only this list as a result. You can also further refine that. For example, I'm looking for at least 2000 percentage points risk reward, and I only see 2 results. I go back to 1000. You can copy the whole table to clipboard, export to CSV, or export to Excel. If you click on compare results, you will see the results in a different view. Right now what you can see is that if you want to compare, for example, 415 strike with these expirations, you will see that the 415 strike, like here and here and here, have different prices. So you can easily compare the different strikes in different expirations. If you are, for example, not interested in break-even 1 or 2, you can hide those columns. If you are looking for the closest target price, you can sort the table by TG percentage column. And this shows you that 411 is the closest calendar spread in terms of the underlying price. If you want to save this scan, you can click on this button and let's save it. Let's call it SPY 3 and click on save. And I already have different templates, but here I can click on SPY 3. And if I want to be notified, as I mentioned in the beginning of the presentation, you can click on the alert button, and whenever something new comes out of this result, you will be notified by email. You can disable the notifications anytime later on if you click on the alert button again. So let's run something else. Let's say I'm still looking for SPY calendars, but I'm only looking for very cheap ones, like below $20. Days to expiration should be closer, like 0 to 21. Front data should be closer to the market, like 30 to 40, if this exists at all. And the expiration differences should be 3 days, 7 days, and for example 14 days. Actually, this list is based on the DTE you select in here. So if you select higher DTEs, there will be more expiration differences. So I'm running the scan for 3 days, 7 days, and 14 days of expiration differences. And I'm only looking for backwardated IV skew and 1000% reward to risk. Range should be 3% and minimum volume 10. Let's see if this exists at all or not. No results. So right now I'm not finding anything that costs less than 20 bucks. Let's say it should be 50 bucks. I have only found 2. If I'm looking for this specific scan, for example, I can save it as a template. And right now I only can see 2 results. But if I want to be notified, I select Spy Cheap and click on the alert button. And whenever there is something coming up for this specific scan, it will notify you via email. These scans are running every 5 minutes. So if NinjaSpread is finding anything new, it will notify you every 5 minutes. Now let's say I want to compare different expiration differences. So right now we have seen that for this search criteria, we have only got results for expiration diff 3. Right now let's compare 7 and 14, but obviously we need to change the price. And let's try with that. Nothing is coming up. Let's go back and try to be less restrictive. I guess the 1000% reward to risk is the problem in here. Now I can see a lot of results. It shows you 7, 14, 7, 14 as expiration differences. And as you can see, there is a contango horizontal skew in here, because in this calendar, the short leg has lower implied volatility than the long leg. So if I want to omit these results with positive values, I can always set it to 0, and it will show you only backwardated skew term structure in terms of horizontal skew. So these are the skews in these combinations. Right now, the best one in terms of reward to risk is 308% for 407, and it expires in 14 days, 14 and 21 days. And it has a 3.1 delta. If I like it, click on watch list, and later I can analyze it or copy it to Thinkorswim and analyze on Thinkorswim. Actually, I would like to show you very quickly how to analyze it in Thinkorswim. So if I click on this Thinkorswim button, it's copied to clipboard, and I go back to Thinkorswim, and here you can click on this button and it will paste it here. Right click, analyze the trade. So here is the trade that I'm looking for in NinjaSpread. Whenever you click on this button, you can copy it to clipboard, you come back in here, paste it, and there is another one in here if you really want to analyze it in Thinkorswim as well. Now let's scan for something else. Let's scan in the all list that contains all the tickers in NinjaSpread. The expiration difference has to be 7, because most of the stocks have 7 expiration day differences between the legs. It has to be backwardated horizontal skew. The price should be from 0 to 100 days to expirations. Okay, it's good for example. Front data 20 to 40, and it shouldn't be too illiquid. And let's find the ones with high risk reward to risk. It's running a little bit longer than the one because it's running all the tickers. And what I found is 2 tickers, one for DAQ and one for Oracle. They all have high risk reward and backwardated high skew. If I want to see more results, I set the reward to risk, for example, to 500. And the range should be the default, and let's leave the rest like that. And now I have found more results like DAQ, FDX, GME, IWM, Lyft, Mo, and Oracle. I can click on any of these and add to my watch list to further analyze later if I want to do it. I can sort the list by risk to reward, and later on NinjaSpread will notify me whenever it finds new ones. For example, if I only want to see 1000% reward to risk, I can save this as a template. Let's call it 1000 RR, for example. I can select it in here and be alerted on it. So whenever NinjaSpread finds something that meets this criteria in all the stocks, it will notify me in email. Now let's do something else. Let's look for all the stocks. I'm not specifying the reward to risk, don't be restrictive. I'm looking for all the skew in horizontal skew. I'm looking for lower liquidity and be it earnings between 0 to 7 days in the next coming weeks or days. This is what I have found. Only Oracle meets those criteria, and as you can see here, Oracle will have earnings in 3 days, and these are the calendar spreads that can be found on Oracle for these criteria. Let's broaden the earnings days. Let's broaden the earnings ranges for, let's say, 0 to 20 days. And I have a different result. CCL, FDX, MU, Nike, and Oracle. They all have earnings in the next 20 days, which meets the criteria here in terms of calendar spread specific conditions. Let's look for something else and search for put calendars as the market is falling nowadays. These are for put calendars, CCL, FDX, MU, Nike, and Oracle, the same result, but with put calendars, and obviously targeting lower prices based on front data. If I'm only looking for example, at the money calendars, I would set to 45 to 55, the front lag delta, and let's look for those. I have only found fewer results. That means those at the money calendars. If I want to have something very out of the money, I will go from 0 to 5 delta as the front leg. And let's see if we find anything there. Yes, we find like CCI. You can tell it's very out of the money because the target price is 30% away, 14% away, 18%, 5, 14, whatever. Let's do it on the call side just to have another example. They are also very out of the money, 35, 11%, 16, and so on. And every single search that you are looking for later on, you can save it here and be alerted, or just save it. You don't need to be alerted. You can also save it like, let's save it like all OTM. And later on I can choose it and search for it, even if I don't want to be notified, right? I can go back to SPY 3 that we created earlier. There's nothing in here. I can disable the alert, or I go back to 1000 RR that we created. I can disable the alert. So you don't have to be notified if you don't want to be. The default is alert is not turned on. That's the default. So if you want to be alerted, click on this. Otherwise, you can save any scan and run later on if you want and see if you got any result. So this was the calendar search functionality, and as you can see here, there are some other system scans. I call them system scans because there is no way to set any criteria here. These are system scans that run with these criteria and nothing can be changed on those. It's just for having some kind of system scans that are already predefined. Here you can look for skew. The C in parentheses means it's a call, and these are scans for puts. And if you click on how to videos, you will find some tutorials in here. But the main functionality is the search submenu in here. These are only predefined scans. If you want to run them, it depends on you. I would run specific ones in here. These are only for example purposes. If you are not sure what the columns mean, you can hover your mouse over the column and it will explain you very shortly. And if you click on the question mark in here, it will give you a short explanation of the result set and how you can interpret it. So far we have seen how to configure and run the calendar scanner. Now let's go to diagonal spreads. Click on the diagonal main menu and you will see almost the same form as before, but with some additional inputs. Let's search for SPY again and look for diagonal spread on a call side. Let's skip those in the default value, and expiration difference should be 3. The strike difference is an additional field where you can set the strike difference, because a diagonal spread have different strikes. Right now I can define the strike differences in here. For example, if I'm looking for 1, 2, 3, if it's comma separated, then the scanner will look for strike differences with 1, 2, and 3 between the strikes. And the type of the diagonal also has to be selected. It can be a bear call diagonal and the bull call diagonal. Let's look for bear call diagonal. And the reward twist should be 100%. CW stands for credit per width of the short spread. This is trying to filter out those spreads where the vertical part of the diagonal spread is too cheap to sell, because a diagonal spread is always contains an embedded calendar spread with an embedded short vertical, and the CW defines how much of a credit has to be received based on the width of the short spread. Let's leave it like the default right now, and later we can analyze that. The range should be set to 0 to 100 to have many results now, and the minimum volume set to be 1. So this is what the scanner has found for us. From our search criteria 1, 2, and 3 strike differences, it has only found 1 strike differences shown in int column, which says strike differences in points. As you can see, the strike differences, these are the strike combinations that was found based on this criteria. As you can see, we have only found strike differences with 1. In this int column, you will see the strike differences in points. And this is because probably we are not accepting credit diagonals. Let's change it to -50 and see how it does now. Wow, a lot more. See? A lot more, because we are accepting negative numbers as the price. These are credit diagonals. I can sort by price. I can sort by risk reward. The best risk reward is this one with a target price of this distance with this kind of expiration, and the interval is 1. Where the range is 0, it means there is no range. The range is always defined when there is a break-even 1 and when there is a break-even 2. With a credit diagonal, there is no break-even 2, because one part of the diagonal is always above the 0 line, and that's why it's credit. So whenever you see 0 as range, it's not a bug, it's a feature, because whenever BE2 as the second break-even is left out or blank, there is no range. In here, you will see break-even 1 and break-even 2, and you will see the range between those break-evens. If you don't want to specify the strike differences, because, for example, you are looking for diagonals in a list, then there is another opportunity here. I have developed that if you specify the strike difference as 0, it will show you all the combinations of strike differences that meet these criteria. So let's get back to only debit diagonals, and look for strike difference is 0, which shows me all the combinations. Okay, let's lower the reward to risk and see if we can find anything else. No, it's probably because we changed back to 0. So let's go back to 50. And now I want to show a result with which gives you more strike differences. You can see 1, 2, you can see 4, 5, you can see 9, 8. These are all based on the upper conditions. So for example, if I'm only looking for 200 percentage point reward to risk, which intervals will meet this criteria? Only one. If I'm only looking for 100 or above, let's see which meets my criteria. There are different ones with 2 intervals. So these strike differences are 2, 1, 1, 2. Let's see if we have something else in here. No, these are only 1 and 2s. You can see the strike differences were not defined, because if you set 0 in here, it tells NinjaSpread to look for all the combinations without being specific. Talking about CW, the higher the number is, the more you get as a credit in terms of the width of the credit spread embedded in the diagonal spread. Usually, the higher the target delta is, the higher CW you get, because the closer you go to the money, which means the higher the target delta is, the higher CW you get, because the vertical spread embedded in the diagonal spread has higher credit by shorting it. I can use the same tactics, for example, looking for backwardated diagonal spreads by changing this to 0, and these are the higher. And if I sort the table by skew, I can see that this has the highest negative IV in terms of horizontal skew with this specific criteria. If I click on range, I see that the highest is 5. So for example, if I'm looking for 5 as the minimum range between break-evens, I can define that and it will give you only these results. I can save it like spy underscore range 5 or whatever, and I can later on be alerted about it. I can also run this scanner for all the tickers or a sublist of tickers. Let's run for all the tickers and look for the ones which has 200% reward to risk, and the strike difference is 0, because we don't want to define the strike differences because it's running on a list of stocks, right? Because there are different strike differences for SPY, for Amazon, for Google, for Nvidia. So that's why I developed this functionality that if you specify 0, it means that it's running for all the combinations. So I'm looking for these with a debit diagonals with these days to expiration ranges, and let's keep with 0 and let's try that. It's running slower than before because it's running for all the tickers, and I can see different type of tickers in here. As you can see, there is Amazon, Dow Jones, DAQ, GME, QQQ, oh my god, that's a lot in QQQ, SPX, SPY, XLE, and XLK. Now let's look for the highest horizontal skew. It has DAQ because of earnings. When it's showing you a negative number in earnings, it means that the earnings was actually yesterday, but the data hasn't been refreshed yet. It's being refreshed before the market opens. So the highest Q is not relevant anymore because of DAQ has had earnings yesterday. The next one is GME, obviously the good old meme stock of GameStop. And which one has the highest risk reward? Amazon. And which is the closest to the market? Let's see which is the closest to the market. DIA. This is the closest to the market. You can always sort for TG%, which says target price, if you want to see the closest. Which one is the furthest? GME. Doesn't make sense at all. I can further refine from data. For example, let's stick with only the ones that are closer to the money. Let's look for the ones closer to the money. The closest one is DIA again. This list is much smaller than the previous one because of the front data. And let's see the biggest range. Oh my god, 44. Yes, dark Q. It's not relevant anymore. QQQ, IVM, DIA. So those are the best ones right now with this kind of search criteria. And remember, these are bear call diagonals. You can always look for bull call diagonals, and you can look for bear put diagonals and bull put diagonals. So you can search for 4 different types of diagonals. And because of the time constraints, I don't want to go into all the details, because I guess as an introduction, based on this, you can figure it out yourself. So I guess we have covered diagonal spread in here. So let's continue with butterflies. So clicking on the butterfly main menu, you will see a similar form as previously used in calendar and diagonal, with a small number of differences. For example, fly type. This is where we define the butterfly type, and you will see BWB, which stands for broken wing butterflies, which is a specific type of butterflies. Later on, I will show you how to use it. Right now, let's look for SPX put butterflies with only debit in the next 30 days with closer to the money. So front data should be around 30.45. Let's leave it like on the default value, and fly type should be the standard one, which stands for 1, -2, and 1. And the strike difference right now should be, for illustrative purposes, 50. And the reward to risk should be 300%. And let's leave CW as the default value, range still as the default value, and minimum volume should be set to 1. So these are the results based on the criteria we set previously. As you can see, we have found 0 DTE expirations, 1 DTE, 2, 3, and a lot more inside this 0 to 30 days to expiration range. And there are many types of reward to risk. The highest is 1,861%, and the target percentage difference, which is the target price of the butterflies, is 3.9% away. The target price in a butterfly is always the short strikes of the butterfly. As you can see, these butterflies have 50 points differences between the legs, as we defined it here. If I'm looking for 50, 75, and 100, I can specify those numbers using comma as a delimiter, and then I will find like 75, 75. I'm not sure if there is any 100 with those set of criteria. Here you can see 100, 100. So it tells you that the first strike of the put butterfly is 4, 15, 39, 15, and 38, 15. Put butterfly with 17 days to expiration. And if I want to have less results, I can further refine the criteria. For example, let's only find something with 1,000% reward to risk. And also we can define CW, which is almost the same as in diagonal spreads, where you can measure the credit based on the width of the credit spread, right? Because in a butterfly, there is always a debit spread. This part is the debit spread, and this part is the credit spread of the butterfly. And with CW, what I'm measuring is how much do I get as a credit based on the width of the credit spread. So right now in this example, the width of the credit spread is 100, and I need to have at least 0 in this type of scan. CW as the percentage of credit based on the width. So if I set 20, I'm looking for those type of butterflies where I get the minimum 20% credit based on the width of the credit spread embedded in the butterfly. I still get a lot of results. And for example, if I'm looking for a flat butterfly, I could set the delta to a minimum number. Right now it's set from minus 100 to plus 100. What if I say I'm only looking for minus 1 to 0? There will be only flat butterflies in here. If you look for a search, see, only these are the butterflies which have flat cumulative delta in the position right now. So this is how you can scan for a butterfly which is pretty flat. Let's go back to the default value and scan again. And here you can see all the different strike combinations. And what if I don't know the right strike combination? Then I can look for all the combinations using 0 again. It says too many results, please narrow your search. It's because in SPX there are so many strikes that with searching with 0 combination, it can give you too many results. So we have to further refine or restrict our search criteria. So let's, for example, look for lower DTE ranges and more narrow front delta ranges as well, and see what it can come up with using strike difference as 0. As you can see here, the strike difference varies a lot. Here is 15, 10, 25, and the range, if you look for the range, these are very, very narrow SPX butterflies. So we can skip those out by specifying range. Let's look for the biggest one, 2%. So let's say the minimum range has to be 2%, and then we can have a fewer results with 2% range. Again, the 2% range means that the break-even points has to have at least 2 percentage point difference in terms of the distance between them. So as you can see, we are finding 45, 50, 45, 50 again. So we are only finding 45s and 50 strike difference combinations using these criteria. What if I lower CW and I lower reward to risk, but I want to increase this to 3 as the range? And we have found many others. Reward to risk ranges from 1,000 to like 600. Let's go back to expiration grouping. And I always look for target price, like how far is the target strike is from the current market price. This is the closest. Right now, SPX is 41.04. As you can see here, we have found different type of interval combinations like 70, 70, 75, 75, 80. We haven't found anything for 45 and 50 because we have set a bigger range as a criteria. If I lower it back to 2, the highest interval is 100, and then we have 45 again. So this is how you can search for different type of butterflies with the standard fly type with 1, -2, and 1. Now let's look for skip strike butterfly combinations, which stands for 1, -3, and 2. As you can see, the intervals changed because they are not symmetrical, they are not the same. So this is finding 60 to 30, and the quantity of legs are 1, -3, and 2. As you can see, it's a little bit tilted this way because it's a skip strike butterfly combination. And 70 to 35, 60 to 30. What else is here? There are only 2 types of combinations with this set of criterias. I can always go back and look for specific combinations like 50 and 100. And if I'm searching for 50 and 100, there are none. So let's look for 60-40. With 60-40, I find 60-30, and there is no 40-20, right? The easiest one is look for 0 if I'm not sure what type of strike differences I'm looking for in a put butterfly, but I want to specify the range, the reward to risk, and the cumulative delta, for example. So far we have looked for symmetrical butterflies, so now let's see how broken wing butterfly works. Let's go back to the standard configuration and try to find something with a broken wing that has 50 as the first leg difference and 60 as the second leg difference. And obviously the reward to risk has to be much lower, and I don't want to define the range right now, just to see what the results are. Here you can see the first interval is 50 and the second is 60. So the difference of the first strikes are 50 and the difference of the second strikes are 60. That's why it's a broken wing butterfly. Here you can see the broken wing type. This is where there is 50 strike difference, and this is where it's 60. As you can tell, it's broken wing. And the risk, the maximum risk is this one. The maximum risk always shows this part of the risk graph, and the price or debit is obviously this part, and the maximum profit is here. As you can see, all the butterflies have negative deltas and positive thetas. If I want to look for multiple broken wing combinations, for example 50-60 and 100-110, I can run those two scans in one scan. Here you can see 50-60, and there is only one result for 100-110 combination. That is meeting those criteria above here. If I'm not sure what type of strike combinations to look for in a BWB, I can always use 0, and NinjaSpread will try and find all the combinations. So let's look for all the combinations. Too many results, yes, so we need to further refine our search. And let's say I'm looking for the minimum 200, still too many results, because there are too many combinations based on the 00 in here. So let's look for at least 20 CW. Now we have found results. And the range should be set to 2 at least, because I can see there are very narrow butterflies in here, which doesn't make sense at all using SPX. So 45-50, 45-50, 45-60, 50-70, there are different types of combinations. 55-70, there are many types, right? The closest to the money is this one, with 45-50. Let's look at the delta. There are positive deltas. If I'm looking for only negative delta broken wing butterflies, I can set it to 0, and then it's looking for only negative deltas. See? There are no positive at all. So this is how you look for all the combinations in terms of broken wing butterflies. And one more thing you have to note in here, if you are using 0 as strike difference and 0 as broken wing, it's only looking for broken wing butterflies, which has higher risk than the debit paid. I'm not sure what the name of this type of butterfly is, but if you are looking for a put broken wing butterfly, it will be tilted downward. And if you are looking for a broken wing butterfly on the upside, it will be tilted upside. If you are looking for example, a broken wing butterfly that is directionally tilted to the downside, you can look for example, 50-45, and then the first part will be 50 and the second part will be 45. So it will be a more negative delta directional butterfly. See, this is what I'm talking about. If you are using 50-55, it's the opposite. because it's showing you higher risk on the downside than on the upside. So this is kind of a neutral butterfly, and the previous one was a little bit, if I'm using 40, it's more of a directional. It's not finding anything with 40. So let's go back to 45. So this is more of a directional butterfly, as you can tell from the data, from the cumulative data number. But if you are using 0 and 0, it will only look for butterflies with higher risk than the debit paid. But you can always look for the other types by manually specifying them. You can manually specify different ones in here, like for example, look for 50, 75 and 100, and look for example, 45, 70 and 95 against those. So 50 will be combined with 45, 75 will be combined with 70, and 100 will be combined to 95. And let's look for those directional butterflies. Only 5045 was found because of the higher CW. Let's go back and here, and let's try with these. I have found one 7570, and let's check if there is any 100. There are many, but I haven't found a 100. Probably that's because of reward to risk, but I'm not sure. This type of butterflies are more directional, negative directional butterflies. If you combine 50 with 55, 75 with, for example, 80, and 100 with 105, then you will look for more of a non-directional or flat butterflies, where the lower part of the risk graph has higher risk than what you pay for. Let's try to look for 0 DTE butterflies on the put side for SPX, where there is a little bit out of the money. And let's go back to the default in here and let's try that. If there is anything expiring today. Today is the 13th of September, and these are all the combinations that expire today. And what I'm looking for when I'm scanning for 0 DTE is the reward risk has to be at least 200%, and it has to be the furthest, but still getting, for example, a credit. I forget to set the credit. I'm looking for credit butterflies, and those are the credit ones. I'm looking for 0 DTE. This is the furthest one. So if I'm looking for 4030, 4020 and 4005, that's 2% away from the market. Actually, this price is from yesterday because in Europe we are in the morning and the market hasn't opened yet. And this has a price of -15, which stands for a credit butterfly. And as you can see here, this is a credit butterfly, credit broken wing butterfly, with 10 to 15 as the strike differences, and this pays $50. The maximum risk is half of the maximum profit, but as you can tell, the maximum profit is never achievable in a butterfly, but the maximum risk is. So it's kind of, you have to keep it in mind. And what I'm looking for in a 0 DTE butterfly is be it a credit and at least have 200 reward to risk, and be it the furthest. So if I want to buy something like that, I'm looking for this type of butterfly. And you can always look it for the upside using the call part. And this is the furthest one right now based on yesterday's closing prices. I need to run this obviously after the market has opened. It's just for illustrative purposes in here. So as you can tell, there are many types of combinations that you can use in terms of butterfly scanning. Now let's look for all the butterflies. If I'm looking for all the tickers in here, let's look for butterflies on the put side that has broken wing, at least 200 reward to risk, and pretty flat if we are using. And let's look for a range of minimum of 2 percentage point. With a credit, yeah, there is no credit at all, so let's beat $50. Those are the only ones with this set of criteria. If I lower the front delta, it will probably change. Yes, it has IWM, QQQ, and SPY are the only tickers I get. It's probably because I forgot to change the DTE. Yes, we have to change it too. There are no expirations in the next 1 day for the rest of the tickers. That's why I haven't found anything. Too many results, so I have to further refine it back. And let's look for only negative data, broken wing butterflies in all the tickers in the next 15 days. And I have found many tickers. As you can tell in here, there are many types of tickers and many types of spreads. So I have to further refine it, like what are the biggest ranges. The smallest is 2%, the biggest is 16. Let's look for at least 5%. Okay, so these are all the tickers. And I haven't shown you something before. If you click on chart view, the whole table will be changed to a chart view settings, where you can see a shorter table with the relevant chart view. As you can tell, this is the AA ticker, this is the AA chart, Apple, and so on and so on. And you can turn these pages. If you want to see the results with the chart view together, you can do that. If you click on table view, it goes back to the regular table view. So these are all the ones that meet the criteria. Let's go back to credit and see if we get any credit, no credit, with 5% range. Let's try with lower ones. Google and Twitter offers me at least 0 price. It has a 2% away target price, and the reward risk is 500%. But obviously it has to be run when the market opens. This is just an example for looking in the my all ticker list and trying to find something lucrative by specifying my criteria. So I think we have covered a lot about butterfly. I guess it's pretty easy to use, but as I said in the beginning, NinjaSpread is good for the traders who know what to look for. So I'm curious what type of scans you are coming up with, and if you need any help with using butterflies and coming up with ideas, or if you have a specific spread that you are looking for, but you don't know how to define it or specify it in NinjaSpread, just let me know. I can help you by trying to specify your set of criterias. So we have covered butterfly. Next, let's go to Backspread scanner. Looking at the Backspread form, we can see that there are fewer inputs in here. Let's talk about them. So first of all, ticker, let's look for something in SPX. A putback spread with this price range. Days to expiration should be from 90 to 150, for example. The front delta should be like 10 to 30. I leave cumulative data as it is right now, and strike difference right now, let's check 50 as a strike difference in SPX. And there are different types of back spreads, putback spread, -1 to 2, -2 to 3, and -3 to 5. Right now, let's start with the standard one, which is -1 to 2. Leave it like the default and try it with these settings. There are no results. Probably it's because it's too cheap. The market changed a little bit in the past, so it was too cheap. So right now what you see are different type of backspreads for hedging purposes, for example. And these are the prices and the risk. And you don't see a reward to risk column because there is no reward to risk because it's unlimited potential in terms of profit. That's why it's not easy, or it's probably impossible to calculate the reward to risk ratio for backspread. What is important for backspread, I guess, is the CW again, which stands for the extra credit spread ratio. If you sort the table by CW, the higher the CW, the closer the front delta is. That's obvious because the closer the front delta, you get the higher credit in terms of the spread width in the credit spread. So right now what you see here is 50 wide backspreads for different expirations. If you click on expiration, you see 94, 108, 129 and 140 days. Let's stick with, for example, 129 and search that more extensively. So here you can see only 129. And let's compare the standard ones with the other ones as well. And let's see how they compare. You see 2 to 3, and there is no 3 to 5 because of the price, I guess. And the front delta should be a little bit lower, just to give you another idea or another example. Here you can see 3 to 5. 3 to 5 again with 50 strike differences. And obviously you can use the same method as before. You can separate with comma the strike differences, or if you don't want to specify the strike differences, see, you have 75, 150, then you can leave it out and use 0 as the all combination, and it will show you all the combination it finds with these kind of specific conditions. 80, 85, 110, 210 doesn't make sense probably, but this is still in the price range. You will see credit ones with 335. Looking at these intervals, they are all over the place, so I am assuming that if you are looking for putback spreads for SPX, you are better off defining them manually. For example, 25, 50, 75, it depends on your hedging strategy. And also it depends on your DTE and front delta, how far you want to see the strikes and what type of backspread combinations you want to see. And with minimum CW, you can define how far you should be able to sell the credit spread in this backspread. The lower the CW is, the more out of the money whole thing is. So if you are interested, you can define like 10 or 5. It depends really on your strategy. If you are looking for very out of the money, like 5 to 20 front delta, you don't need to, or you shouldn't specify too high CW because it won't find it. Right now the lowest is 5.1 when using this 5 to 100 range. And looking at a putback spread, I guess it's also very important to see the VT, which is the Vega per theta ratio. You can sort the table by Vega theta ratio, and here are the standard cumulative deltas. You can obviously define those by specifying here. For example, if you don't want to have very high delta stuff, then you can do like -5 to 0, for example, and then you will only see kind of flat backspreads. Or if you want to see high deltas like 20 to 50, there is none. So I would say like 10 to -15. Yeah, you will see a lot. And obviously, if you are looking for some very specific condition, for example, you are interested in 50 wide backspreads that are between 120 and 130 days to expiration is just an example. It can be 180 or 200 days with this front data, but you are looking for something below the price of, I don't know, let's say $2,000. It will not find anything, obviously, it was not in the list, but then you can save it like SPX BS cheap, and then I can alert myself whenever this kind of backspread comes around by clicking on the alert button. So every 5 minutes, NinjaSpread will run this scan on the market data, and if it finds a put backspread with these conditions under the price of 2,000, it will let me know via email. So this is how you can alert yourself for conditions that are not available in the marketplace right now. You can obviously run the whole backspread thing for all the tickers, but for me, for my trading strategies, it doesn't make sense to look for backspreads or in all the tickers. You can run it for SPY, QQQ, whatever you are looking for in terms of hedging purposes. Obviously, you can run it for on the call side as well for other type of long volatility strategies. So this is what you have in backspread. And let's move on to ratio spreads. A ratio spread is the exact opposite of a backspread. So they have the same columns in here. Let's say I'm looking for a SPY ratio spread on the put side with these types of ratio spreads, and I'm looking for something very cheap because, for example, I think that implied volatility is high, and that's why I would like to look for something very cheap, trying to harness the high IV numbers in here. So, for example, 10. Let's look for something more close to the money, and yeah. There's another field in here that's not applied in backspread, the range. I'm looking for the range of the ratio spread. Let's be it like 3 in terms of SPY and see how it does. So 6 days until expiration, there is one which shows 406 and 400 strikes. And if you look at the range, if you sort by the range, this has the highest range in terms of break-even points. If there is no break-even point, then it means it's a credit one. So right now, below $10 for debit, I can buy these types of ratio spreads with 20 days to expiration. There are many, so I can further refine or define this search criteria set. For example, let's look at only for 2 to 3 version of ratios. And this is the one I got. Let's try to find something with negative or very low positive delta in terms of direction. And I only got these ones. And the range are above 3. Let's look at the range at 2. Yeah, I found this one as well. And here you can see the target price. This is a target price of 5.5% away from the current market price, which means that this kind of ratio has the highest probability in terms of distance from the current market price. And this only costs like $6 in terms of debit. And this has one negative delta. Which one has the highest negative delta? This one has the highest negative delta, with 4.8% away from the market. I mean the target price, which is 391 right now. The target price is always the short leg of the ratio spread. So as you can see, this is not very different from the backspread. There's only one minor difference, that you can set the range in here as a criteria. So now let's move on to the vertical spread scanner. I guess by now the form looks very familiar. Let's scan for SPY, choose call, type bull call spread. Here you can choose the bear call spread or bull call spread, or you can go for bull put spread or bear put spread. 4 types of verticals are available in the vertical scanner. The price should be from 0 to, for example, 100, and let's look for closer to expiration, like 21 days, 20, 40, and the delta should be positive, obviously, and the strike difference should be 5 right now, just for example. As you can see, the lowest reward to risk right now is 400%. The highest is 600%. I can define it here as previously stated many times, like 300, look for bull call spread, and I can say, for example, that I don't want to define strike diff. Let's use 0, and it will give you many types of strike differences and spread width. This is a standard bull call vertical spread. Here are the intervals. Always the intervals show you the difference between the strikes, so it's easy to sort the list by intervals. This is the highest interval, as you can see, 418 and 426, contains $5 points of interval, and the expiration is September 14. You can always sort by target price percentage point. This is the furthest from the money, from 410.15, and this is closest to the current market price, with a 300% reward to risk. I can obviously look for bear call spread, which have credit, and let's say minimum is 0, risk reward should be 50, bear call spread, and front delta should be like 30, 50, closer to the money. And let's see if I find anything here. I'm not finding anything here because reward to risk is pretty high, I guess, or there is something wrong in here. I'm not finding anything because I left the delta to positive delta, and it will never have positive delta. So I have to change it back to the default. And now let's look for too many results because I set to 50. Let's go back to 20 and too many results. So I should be able to see at least 40% reward to risk. Okay, here are the ones with negative delta. Yes, all of them have negative deltas. And these are the strikes that has to be in the spread. And the furthest from the money is 2.5% away, 422 and 421 in 17 days to expiration. And we'll give you a credit of 29 and the risk of 71. So the reward to risk is the minimum 40 I set here. Let's look at the biggest one, 203. So I guess this scanner is pretty easy. Let's look for a bear put spread with a front delta of 30, 20, playing the downside with a minimum of 10 days to 30, and the risk reward should be set to 200, for example, and there is nothing found. I guess it's because I haven't changed it back to debit, and now run it with a 0 strike difference combination, so I'm not setting the strike difference. As you can see, there are many results in here, so you need to further define scans like that. So I guess it's pretty easy to find vertical spreads using these criteria. You can obviously use the previously mentioned methods in here. If you want to search for different strike differences, you can define them with comma delimited input fields. Now let's move on to Iron Condor spread scanner. Let's scan for an Iron Condor in SPY, which has to be credit in the next 40-60 days. And front data is a little bit different here than previously used. It defines right now the short legs of the Iron Condor. So if you are looking for an Iron Condor that has around 15 delta call and 15 delta short put legs, then you should stick with like 13 to 17. The delta should be left by default, and the strike difference defines how far the short and the long leg has to be from each other. Right now I'm not looking for a specific distance, so I'm looking 0 as a combination scanner, and for reward to risk I'm looking at least a 40%, and let's search for it. Based on this criteria, there are only 3 iron condors found in here. The short deltas are 16, this refers to the put, and 15, this refers to the call. You get $58 as credit. The maximum risk is 142 because it was looking for a 2 wide iron condor long and short leg combination, because I defined 0, so that's why it's looking for all the combinations, and this was found. The range was not set, it's right now 15%. The volumes are for each legs, the break-even 1, break-even 2, and the delta, gamma, theta, vega are cumulative for the position. The range probability number comes from the shorted delta. If I search with 0 reward to risk, then I will find lower reward to risk numbers as well, like 34, 37. I would not trade these iron condors, they are too low for me. But here you can see that this one has specifically $100, $108 as credit, but the intervals are $4 away. So this means that the 64 is the distance between the short strikes, and 4 is the distance between the long strikes. See? So this put spread contains 374 and 370 against 438 to 442 call spread. So this is a put spread short, and this is a call spread short. So this is essentially a put credit spread, and this is a call credit spread. They are 64 points away from each other. The market is right now somewhere in the middle or in between, as you can see from the cumulative data points. And if you are looking for example, a higher reward to risk iron condor, you should say, for example, 50, and there are no results. And I can save it IC save, select it, and then I want to be notified if something comes around with this criteria. Otherwise, I can always manually use this scanner, and then later on I can, for example, refine the scan criteria if I want. If you want to have a tighter iron condor, you can, for example, look for 20-25 shorted deltas, and they will obviously have higher reward to risk. As you can see, 70 to 75, 80. And they have also 2 points between the long and the short legs in the credit spreads, using the 0 strike difference combination. I can search for all the tickers and looking for iron condors with this kind of setup. Let's look for at least 50% RR. Let's see if I find anything here. Yes, I could. I was able to find. Here is a nice one, for example. The maximum profit potential is 53. The maximum loss potential is 47. There is a 1 strike difference between the long and short legs, and 31 difference between the shorted strikes, and they expire in 45 days. Now let's look at the highest credit. This one has the highest credit. It's an SPX. We have 435 points away between the shorted strikes, and 10 points between the long legs, and an 85% reward to risk. There are many iron condors in here that meet those criteria above. Let's try to look for something very out of the money, if there is any, using a front delta between 5 to 10. The reward to risk probably will not be 50 at all. Let's look for the minimum values. The best reward to risk right now is for SPX, 22%. You get $90 as credit, but the maximum loss potential is 410. But they are pretty far away from the market, because the short put has 9.8 delta and the short call has 9.6 delta. So they are like 10 delta out of the money. Short put and short call, the range probability based on deltas is above 80% right now. And the exact range is 21 based on the underlying price between the short put and the short call. So I guess we have covered Iron Condor. Now let's move on to the target scanner functionality. So clicking on target, you will see a very different form than we used previously. The reason for that is that I wanted to achieve a functionality where you can easily compare different strategies if you have an idea where the underlying will go to. So you will have to have like a target price in mind. That's why it's called target, and the target expiration. So let's see how it works. Let's choose SPY again, and let's assume that, for example, by the end of this month, I think SPY will go to around 410. And I'm looking for a reward to risk from 0 to 10,000, leave it the default value. Here you can customize the calendar diagonal settings. Here you have to define the expiration difference as used before on calendar and diagonal tabs. Here you can set the horizontal skew. And for diagonal, there are different settings as well, because you have to set the strike differences and the type of diagonal. So in terms of call, if you are using call, you can have a bear call diagonal and a bull call diagonal. And if you want to further customize, you can change from the calendar diagonal settings here to differ for diagonal in terms of the skew and expiration. If it should be the same, just leave it like that. And for butterfly, you also have to define the strike differences, the type of butterfly, if it's a broken wing butterfly, and also set the CW. For vertical, it's easy because the only thing you need to specify is the strike differences. Down here, you can specify the different Greeks, like the delta has to be positive, negative, or all, and you can set the same settings for all of this here, and the usual minimum volume. So let's say, for example, the strike difference should be like 5. And if you set 5 in here, it will copy to all the strike differences input fields, but you can later on change it, for example, to 10 for butterflies and verticals to 3. And let's see if we find anything with these settings. As you can see, we have found calendar, butterfly, and vertical. There are no diagonals with these settings. It's probably because of the strike difference. So what if we change it to 0? It will copy to all the other ones, like butterfly, verticals, to be 0. And let's look for with the combination. Here are the results. As you can tell from the strike difference using 0, there are different strike differences like 18, 17, 8, 7, 6, whatever on butterfly, and on the vertical side as well. So this way, NinjaSpread will show you what are the possible strategies if you have an expiration and the target price in mind. If you want to further refine it, let's say we are only looking for 100% reward to risk. Let's look for that. We still have a lot in here. Minimum volume should be 1, which is not a problem for SPY. And let's say that we are only looking for positive theta and positive delta positions or strategies. There are no diagonal, butterfly, and verticals. Probably it's because positive delta was set. Let's go back to all. And butterflies and verticals are also not found, yes, because of the positive theta. If we go back to all, you will see all the results. Now we can combine different expirations with different strikes. So let's say we are thinking about these 3 expirations and like these 3 target prices. And now look for those. And as you can see, you have different calendars, different configurations, and you also have different expirations for different strikes. How it works is that for calendars, I'm looking for 405 as the target price, as defined in here, 410, 415 as defined here, and also for diagonals, those are the target prices. So 405, 410, 415, 405, 415. Butterfly is the same, but using the target price as the short strike, the middle strike of the butterfly, and obviously for verticals, that's the short strike in the vertical spread. Let's go back and change the expiration difference to 3, 4, and 5 in terms of the SPY expiration differences. And the strike difference should be like 0 again. And let's see what it's coming up with. There will be a lot of results, I guess. Yes, a lot. Many calendars, diagonals, butterflies, because we used 0. Oh my God, that's a lot. We have many types of intervals in here for vertical, like 20, 19, 19, whatever. So I guess we should further refine reward to risk, at least 200. We still got a lot, but for verticals, it's a little bit shorter list. We can later on say that we are only interested in positive theta positions. Then obviously verticals will not be found. See, there are no results for verticals, but we are still finding butterflies with these settings. Let's say we are looking only for positive delta positions. Calendar, diagonal, and butterflies still work. And let's say we are picky and we only are looking for 500% reward to risk. There are no diagonals, obviously, for understandable reasons. Calendar, butterflies, and no verticals. Now let's say we are only looking for backward dated time spreads. See, there are only negative skews in here. Still no diagonal, because we used 500. Let's lower it to, for example, 300. And let's see if we get anything for diagonals. Still nothing for diagonals. Let's go back to 200 just for example purposes. Yeah, there are diagonal spreads again. The lowest is 225. If you want to hide some of the columns, this is a column selector here. You can, for example, hide range, or you can hide delta, or you can hide any of the columns in here. So this is how the target scanner functionality works. Now let's move on to tickers. It will show you all the tickers that NinjaSpread contains at the moment. I am open to add to this list if you think that you found something that is liquid and it's good for option strategies. This only contains the very or highly liquid underlyings. You will see the sector underlyings in here. And there's another submenu called Earnings Stat, which shows you all the companies that have earnings in the next 14 days. See, the days to earnings are 5, 12, 14, 7, 14. And this will give you a historical statistic based on what the underlying did in the previous earnings. MV1 stands for the first previous earning, the second previous earning, the third previous earning, and so on. And the 12th is 12 earnings before, so it means it was 3 years ago, because there are 4 earnings in a year. And I have historical data for 12 earnings in the past. So MV12 is 3 years ago. So, and these numbers tell you what the earnings reaction was for the selected earning period. So if you want to see the previous one, you look for MV1, because that's the most recent earnings reaction. Here you can see the average move. Here you can see the implied move based on the implied volatility in the marketplace right now. These are the call open interest and put open interest. This shows you the IV percentile. This shows you the IV rank. This shows you the IV itself and the last price of the underlying and how many days you have until the earnings announcement. So this is what you can do in tickers menu and all sectors and earnings stat submenu. The last menu is called My Scan, and here you can customize NinjaSpread. The first one is called Favorites, and here you will see all the previously saved scanning templates for all your strategies. Here you can look at them and delete them. where it's called ticker list, and you don't see a ticker, that's obviously running for a list. And if you click on the arrow, you will see all the underlyings included in the list. In ticker list submenu, you can create your own list that you would like to run a scanner for. So let's create a list in here. First, you have to name the list. Let's call it new and save it. After you have saved it, you can click on any of the underlyings that you would like to include in this list. Let's only include, for example, some technology company like Apple, Meta, Microsoft, Google, and let's say Tesla. I have to save the ticker list in here. And now if I go back to calendar, I can select the newly created list, which is called new. And right now, what it does, it will only scan for those underlyings that are included in this list. See, Apple, Google, Meta, Microsoft, and Tesla. So this is how you can create your own ticker list. Let's go back to my scan, ticker list. And here you can also delete this. If you select any of your lists, previously created list, you can delete them. Click on the delete button and now it's removed. Let's go to watch list. This shows you all the different spreads that you have previously added to your watch list. So for example, if I go back to calendar and look for an Apple calendar spread, and I click on this one here, it will be added to my watch list. You can check your watch list in here. See, calendar Apple was added to the watch list. And if you click on this, you still can copy this spread and analyze it in Thinkorswim. You can also delete these items if you want. But whenever the expiration is over, NinjaSpread will remove these watchlist items for you, so you don't need to delete manually. Whenever something expires, the system will remove it from the watchlist. In the daily alert tab, you will see all the spreads that you got alert for today. Right now it's empty because the market is not open yet. Whenever you get an alert in an email, this will also be included here in a table format like in a watch list. There is another functionality I wanted to show you that we haven't talked about previously. For this test account that I'm using for NinjaSpread right now, I enabled Tradier functionality. So let's look for an Apple calendar spread. You will see the last column called Tradier. And if you click on Trade, and you are logged into your web interface on Tradier, this will create an order for you. So it will create an order ticket based on the expiration, based on the strike, and the price of the spread that you can see it in here. But it's very important, it will not send the order on your behalf. So NinjaSpread has no access to your Tradier platform, to your Tradier account. It will only create an order ticket based on the data, so it saves you time by selecting all the things that you see in this spread. So very important, NinjaSpread has no access to your Tradier platform. It will only create the order ticket for you, and you have to send the order yourself on the Tradier web interface. And I guess it's pretty handy for a butterfly or a more complex spread and saves you a lot of time. There is another functionality in Calendar Scanner which we haven't talked about before. If you select SPY, you will see there will be another checkbox in here which says historical RV. This stands for historical relative value. If you click on historical relative value, and let's look for a shorter term SPY calendar with like 3 days in between, and let's look with 20 to 40 front delta, and with at least like 300 reward to risk. And if you click on historical RV, you will have 4 new columns in here. The first one stands for RV. RV is the relative value of the calendar. The relative value is calculated by dividing the price of the calendar with the underlying price. So that's the relative value. The historical average relative value is what the historical average RV was in the past. I have historical data starting from January 1st, 2019. The RV diff percentage is how much the present calendar spread differs from the historical ones. RV count stands for how many times I have found similar calendar spreads in the past. So for example, if I sort in RV diff percent column, I will see that based on historical averages, this spread is 43% cheaper than it was in the past. Because right now the RV is 0079 and the historical average RV is 0.14. That's why it's 43% cheaper than the average. But I have only seen this type of spread 12 times in the last almost 4 years. What I'm looking for in terms of similarity is that in the past I have to see the exact same days to expiration, the exact same expiration difference, and similar volatility skew and very similar target delta. In volatility skew and target delta, I'm looking for a plus minus 10% difference between the present values and the historical values in the past. So these have to be the exact same values, and target delta and skew can differ in a range of plus and minus 10%. And the higher the RV count is, the more relevant the finding is. Because as you can see, I have found 59 instances of a calendar spread that is similar to this one, and the RV of the present one is this one, and the historical average is this. That's why the RV diff percentage is 19 point. So this is 19% cheaper right now than it was in the past almost 4 years. And the higher the RV count is, the more relevant the statistics is. If I'm looking for something with a more usual expiration difference like 7, and I'm not looking for this high reward to risk, let's see what it's coming up with. If I sort based on the RV count column, I can see that this one has the highest RV count, so the more reliable, quote unquote, and this is 7.9% cheaper than the historical average. This is obviously not telling you if you will make a profit with this trade or not. It just tells you that based on historical prices, is this cheaper or more expensive than in the past based on the average of the similar spreads in the past. You can use this historical RV functionality with SPY, SPX, IWM, and QQQ. So the bigger ETFs and indexes. If you go back to, for example, Nike, historical RV checkbox will disappear from here. So using historical RV functionality, you can have a sense if the present calendar spread is cheaper or more expensive than in the past. Let's look for more expensive ones. This one, for example, is more expensive than it was in the past almost 4 years. As a second example, let's look for SPX historical relative values, but keep in mind that SPX has a lot more strikes than SPY, so the running time can be higher than previously. Let's look for backward dated and a shorter period like 0 to 21 and a minimum of 300 and 2040 data, and click on historical RV. And let's start the scanning. As you can see, it takes a little more time because it has to scan for all the different previous historical values as well. As you can see, we have found these calendars, and the cheapest one is 55.3% cheaper than the historical average. And NinjaSpread has found 35 instances in the past. Let's look for the biggest one. Oh my god, that's a lot. 154 instances in the past of a calendar spread that is similar to this one. Current price is 42.1% cheaper than in the past. If you uncheck the historical RV checkbox and search again, it will run much faster than before because it doesn't have to look through all the historical data, and obviously these 4 columns will disappear. These are the results without the historical RV functionality enabled. In the meantime, I have added another little icon in here which shows you a bug, and if you click on it, it will go to GitHub issues. And if you have any issues with NinjaSpread, or if there is another functionality that you would like to see in NinjaSpread coming alive, then please include those in here. I guess we have seen everything that NinjaSpread can help your trading with. If you are looking for a new functionality that might help your trading, just let me know in GitHub. Or if you have a spread in mind that you would like to scan for, but you are not sure how to specify it in NinjaSpread, just let me know, and I can help you creating the specific scanner for your own needs. And I guess we have reached the end of our presentation. I hope you have enjoyed it and benefited from it. And if you have any questions about NinjaSpread or any of the previously presented concepts or methods, just let me know. Thank you for your attention. Take care. Bye.